So another portion of current liabilities is the employee-related liabilities. And within the employee-related liabilities, it's one of the highest costs in any business, right? So the salaries payable is one of the highest costs. So whenever I'm evaluating a business, the first thing that I'm going to look at is the salaries, right? Because what's within the salaries? You have, of course, the rate of pay. You have potentially your 401k plan. You have potentially healthcare benefits, dental benefits. So there's all these other benefits that are associated to one salary. When you think about it, even if you're going to be paid $50,000 a year, they're probably spending around 75 on you, or 75,000. So you could think about it when you start increasing these numbers. If they're paying you $100,000 per year, they're probably spending around 150 on you, right? So when we may say things like, "Oh, you know what? I'm not getting paid that much anyway." Well, technically, because there's more of a cost than what we can imagine. I think one of the things that we can look at, or one of the websites, let's look at, let's see here. Let me go into Chrome. So let me go into KPMG.com. So that's one of the, of course, big four accounting firms. Okay. Let me break this down even more. Okay. Wow, and it's still going. Contact us, legal, social media. Let me go here. Save jobs. Job search. Of course, the current location. Most of us are probably going to look in the United States. Then we have to say, let's look at students, culture, learn more, internships, award winning, get started now. So it says great benefits. Okay, so when we think about their benefits, it says, of course, you want a generous compensation package, and KPMG delivers. The firm offers a fabulous combination of generous financial rewards and comprehensive employment benefits, including leading-edge work-life opportunities. Create a program that's right for you from a full options menu. So here we go, health, wellness, and insurance benefits. So you have your choice of medical plans, dental plans, vision, life and disability insurance, and also more insurance if you needed, supplemental insurance. Here are some money-saving benefits they also offer. Wow, they have a mortgage assistant program, home benefits program, So when they talk about moving professionals, if you're trying to move from one spot to another, I've seen it where one of these guys that I was working with, his wife moved from one part of New Jersey to another part of New Jersey. They came in, they wrapped everything. They wrapped all his bowls, um, um, forks, spoons, everything. Um, they took his furniture out, so it's a very professional firm. It cost $75,000. Yeah, the company paid for the move because his wife was moving from being a marketing director to more of a vice president role, right? So they paid $75,000 in order to help them move. So there was like this big long 18-wheeler, and they put absolutely everything in their house.
Did they unload it then too?
Unload it too.
Wherever they wanted it.
Wherever they wanted it.
That's awesome.
Right? So they're like, hey, where do you want this? Where do you want this? Right? So there are places that will do that total move for you. You just got to pay for it.
That's how you build trust for the.
Yeah.
No,
Well,
it says in the WageWorks transit program, it's designed to save you free tax money on transit and van pool expenses. What are van pool expenses?
okay, let's look that up. So whenever you are pooling with other people, that's what it should be.
Oh.
Yeah. So a van pool is just like a carpool.
So it's kind of like with the movie company, except.
No, so this is just like to and from work and stuff like that if you're going to be with other people. So in New York City, what they normally call those are the dollar vans, right? Where I don't know if they're $1 anymore, but I know when they first came out, you just give the person $1, and then you could go as far as you want to go. I know now they've done that with airports. So now with airports, they'll have a van there, and you pay like $20, and you'll go from one airport to another, right? You can do that. The benefit about that is when I used to look at that, they like to go from airport to airport. A lot of times it costs like $110, $140. So now you're only paying $20. How can you beat that? You can't beat that, right? But the way that they're winning is because there's many $20 in that one van, right? So if you have maybe a 15-passenger van, maybe you hold 10, and now you're going to make $200. So you make $200 in one trip, and then you come back with people.
Yeah, you pick up people from that other airport.
Yes.
Yeah, it's a cash flow operations for both ends of the state.
Yes. So think about it. 200 there, 200 back. So now you have $400.
If you work an 8-hour day and you get all those people, you're over $1,000.
$1,000 in a day, man. So $1,000. So $6,000 in potentially in a week.
When you're on a taxi cab, they're lucky if they make because of how much they charge.
Yeah. And remember, because of the influx of Ubers now and Lyfts and stuff like that, that has decreased the income of these type of drivers as well as limo drivers. Right. So, getting back to the salaries expense, you have perks and work program, automobile and the homeowner's insurance, right? So they're paying for all these extra rewards, and we need to think about this as a large salary expense. So when you start owning your own business and you're trying to get people to work for your business, you have to offer some of these things because other people are offering it. And if other people are offering it, you potentially have to offer it too. So some of these payroll deductions. So it says here, most common types of payroll deductions are taxes, insurance premiums, employee savings, and union dues. So it says Social Security taxes, federal old age, survivor, and disability insurance. Okay, so that's OASDI. We normally see that on within our 2-week paychecks, but also remember on the W-2. So funds from taxes levied on both employer and employee, The current rate is 6.2% based on the employee's gross pay, up to $118,500, which this number has increased. I think it was like 110 before. So now they increased it. So now we're paying more in taxes. Right? We're paying more in taxes because now we need to fund the Social Security system because the Social Security system has changed. It says here in 1965, Congress passed the first federal health insurance program for the aged. So when you think about it, when they passed the first federal health insurance program, they didn't really have an analysis of how big the population was really going to grow. So they based this off of things from before. Okay. Employment taxes provides a system of unemployment insurance, so you're constantly paying into the system, potentially if you were ever to be unemployed. The challenge about this system, though, is usually you're only going to get credit for potentially like your last year and a half that you had within the payroll deduction. So think about it. You could be putting into the system for 20 years, you become unemployed, and now all of a sudden they're only going to give it to you for like 6 months, even though you've been putting in for like 20 years. Right? So that's the challenge with this unemployment system. So in the state of Pennsylvania, let's really look. Let's see. Your weekly rate is the amount you can receive if you are eligible. Okay. Your weekly rate is calculated based on wages you were paid in your base year. Okay. Let's click on base year. What is base year? The benefit is a period. Okay. Okay, I guess now they're doing 52 weeks. So you can get unemployment for a year. So it's saying your base year is generally the first 4 of the last 5 completed calendar quarters that you completed. So the last 4 of the first 4 of the last 5 quarters that you were actually working. So their example here is that let me see here. July, August, or September. So basically you would have to, it's just going to go, what is that, about a year and 3 months back in order to calculate your base year. All right. And let's see, I want to know the maximum benefit rate as well. Let's look for the maximum benefit rate. Okay. So they're saying there's different calculations here. They're saying if you are eligible for benefits, you may receive an additional $5 weekly for a dependent spouse, plus $3 for one dependent child. If you have no dependent spouse, you can receive $5 for one dependent child, plus $3. In either case, the allowance for dependents cannot exceed $8 a week. Now think about this. Because you have children and a spouse, what is $8 really going to do for you a week? Nothing, man. That's a total of $32 more a month. So you're on unemployment and you tell them, oh, I have a spouse and I have a child. Or maybe I have 5 children. And they're saying, all right, you're going to get an extra $32 per week. I mean, per month. $8 a week. It doesn't. You can't pay anything with 30. I mean, maybe one meal.
If you're lucky.
Yeah. If you're lucky.
$32 a week. Give you a meal.
Yeah. So let's look at the maximum benefit rate. $573. For $573 plus another $8, that brings you to what? $581. That's your maximum benefit rate per week, right? So let me do a calculation here. So let's see, 581 times 4, $2,324. That doesn't include the potential 10% tax rate. So you have to take out 10% for the state tax. Take away 232. So you're left with $2,092 to live off of. Yeah. So say if your rent is like $1,000. You have your car insurance, you have your water, you have your gas.
Phone bills.
Yeah.
Food.
It's gone, man.
Telephone.
And then they ask us, why do we take so long to retire?
Yeah.
Well, at some point, my uncle rolled up to retire, but he told me, why retire? And I love my job so much because all I'm going to do is be bored at home and get a part-time job.
Yeah. I mean, most people who retire, they often look for something else to do. So unfortunately, my mother now, she loves gardening. So she's been doing a lot of gardening, but she now has just been collecting whatever. Collecting, like, say, so for instance, those 2 homes that I said that I purchased, those 2 foreclosures, they have loads of stuff still in there, right? So there's like a new washing machine, there's like an old washing machine. So her washing machine, it broke maybe about 3 weeks ago. So they gave her a voucher to buy another washing machine, like a brand new one. She's like, okay, yeah. So she said, so we've seen the 2 washing machines in the other houses, and she tells me, hey, bring those washing machines to my house. I said, why would I do that? Why do you need 2 washing machines? She's like, just in case this one breaks. So I said, so now you're going to have 3 washing machines inside of your house? She said, yeah, just in case.
Where does she have her washing? Are they down in the basement?
They're down in the basement, but the thing is, when you're retired, right, you start thinking about all these little things to do and all these little things that you potentially don't need anyway, right? So it's nothing different than I was reading articles about these athletes, and one athlete, Kevin Durant, who's injured right now. Yeah, he ruptured his Achilles, and he said, hey, they're like, what are some of the craziest things you've purchased? And he said, I purchased an Xbox. And he was like, I just purchased like 10 of them just to be purchasing them because he has the money, right? So I'm trying to make you see the correlation here is that when people have a lot of money and they're like, I already got everything that I have, they start spending on frivolous things.
Stuff they don't even need.
Yeah, stuff you don't need.
Floyd Money Mayweather with all his Bugattis and his...
I mean, why do you need 5 Bugattis? Like,
Yeah.
real. Like, okay, one for each. Is it like, can just 2 cars or at least 1 car do that?
Yeah.
Like 5 Bugattis,
There's no
he's
need
a couple DeLoreans.
Yeah, he
And
got.
he don't
he
even
got
drive it.
and then he got like 3 Ferraris. So
Yeah.
3 Ferraris, 5 Bugattis. Then he has every kind of Rolls Royce, every model in it.
Well, here's the thing,
He
though.
don't drive in all of them.
No, but when you talk about stuff like that, in our analysis, we can say that it's wasteful. However, he still has hundreds of millions of dollars left.
He left. He still got that paycheck from the time he fought with Pacquiao.
Yeah.
He still has it, and he still has it's 250 million, and he hasn't spent that check.
Well, so I mean, really, we can't say too much of anything because he has enough. Like,
and, I mean, he has kids. He's not married though.
So
he has 3 women living in the same house.
Wow.
And they're his wives, like his woman's, like his, in the same house. I don't even know how you could share a man, like, wow.
Hey man, those are people are doing it, man.
These kids are grateful to have a dad that could provide them.
Yeah, he used to have. I don't know if they still doing that, but he used to have three of his women like living together in the same house.
Yeah.
Sister wives.
Yeah. So we can see here that there's a lot that goes into the federal unemployment tax, and if you're on unemployment, it's not as beneficial. So yeah, it's gonna give you some type of relief, but it's not gonna give you the type of relief needed in this market because technically, this change, this percentage should have changed. And actually, how do you calculate the unemployment rate of the United States? Do you know how to calculate that? Okay. We're going to see an analysis of the unemployment rate.
Also, it's by the number of unemployed workers, by the number of working and non-working individuals.
Let me see if I can just get that image.
And labor force, unemployment rate.
Oh, it's bringing me to the same one.
And you multiply by 100. And subtract the unemployment.
No, but there's No, but I want you to Okay. Okay. Here's a good analysis. So it says unemployment rate, unemployed versus divided by civilian workforce. But what is considered unemployed though? Right? So it says if you've been looking for a job for the past 4 weeks and you've been without a job for 27 weeks or more. But let me see, 27 weeks. Long-term unemployed. So what they're saying is discourage workers. So if you've looked for work anytime in the past year, but not in the past 4 weeks, you're no longer counted as unemployed. Right? So usually what they say is if you've been looking for work for 6 months and you haven't found a job in 6 months, then you're not really trying. Right? You're just
making people think you are trying to get
yes, right? So what they do is they drop you out of the unemployment rate, right? So let's look at the U.S. unemployment rate.
Because like for real, like you can find a job in less than 2 months.
Yeah. Even if it's a job that you can always learn your way out.
Yeah.
Let's see unemployment rate 2018.
I spent a whole month in New York trying to get a job. Everywhere I went was like,
we need you. Job? This
have an application real quick. Every time, like, I walked to every store. I didn't care what it was. It could have been like a market, whatever. I just walked in like, yo, you got an application form? I want to apply right now.
And then if you show dedication, you want a job, they'll give you an interview right away and hire you right on the
Like
spot.
everywhere I went, yo. I never even asked nobody. Like I never even went like, Like as soon as I like grabbed something to buy, I was like, yo, you got an application real quick because I want to apply. Where's your manager at? Apply real quick, yo.
So here's the unemployment rate. We see it at 3.9% at the end of 2018, right? But here it says the unemployment rate by year shows the rate in December of each year. It gives a broad brush review of how bad unemployment was. It reveals that unemployment exceeded 10% twice. It was between 14% and 24.8% during the Great Depression. It was greater than double digits between 1931 and 1940. The only other year that ended above 10% was 1982, when it was 10.8%. Current unemployment rate statistics. So it's showing here like it was over 20% at one time or whatever it was, right? So what I want you to keep in mind is that realistically, even though it's showing around 20%, statistics will show that it was really like closer to almost 50% of people were unemployed, right? If we do the real calculation. So the reason why they're calling it the Great Depression is because one of the reasons is because the unemployment rate was so high. It wasn't just around 10% and 20%, and now we're calling it the Great Depression. It was definitely a lot higher. Right? So you could think about it. If there was 100 people in a room, let's say about 45 of those people weren't working. Right? So whenever we see this unemployment rate in the United States, it's really not 4%. It's probably closer to maybe like 10% or something, right? Because they're not calculating absolutely everyone. They're only calculating those who believe are currently trying to work, right?
So they're not including people that like are at work and like they don't work a 40-hour work because the job's like lying
Exactly.
Or
exactly.
Sometimes it happens to my dad. Like my dad works at the brewery, and
Yeah.
sometimes when they're in their like slow weeks,
Yeah.
he'll work less than 40 hours a week, so he can apply for unemployment.
Yeah.
That time.
And anything dealing with like the construction industry, and it talks about here.
It's a pain in the ass when you apply for it too.
Yeah. Cyclical employment is a type of the media talks about the most. It rises dramatically during the contraction phase of the business cycle, right? So you have, yeah, so happens when, no. Yeah, it's just a cyclical unemployment where it just has a cycle where there's a busy season and then there isn't a busy season, right? So it's constantly going through those cycles, right?
There's like businesses that actually tell them their actual employees, like,
Yeah.
we're gonna lay you off for a while,
Yeah.
take unemployment, and then come back and start your pretty overtime.
Yeah.
That's what I feel like with construction, because if you're making money when you're in the busy season, you're making good money.
Yeah.
And once when you're in your off season, you're barely making anything.
Yeah. I mean, it's just like landscapers and stuff like that. So that means that you have to learn how to budget, right? In the summertime, when you're making a lot of money, you're supposed to be able to just like
save some, right?
save some and just stretch it out.
That's where
right?
you make your purchases now,
Mm-hmm.
and make your, like, if you want that dream car.
Yeah.
And in the summer season, you have the money, and then
Mm-hmm.
pay on in the winter.
Well, so now you can see too that when these politicians are talking about, I came into office and now the unemployment rate is better. Technically, there's some things that you had no control over, right? You may have created jobs, but all that did was put certain people back into that equation who weren't working, right? So now you have this huge jump, but the huge jump really doesn't make any sense because those people weren't in the calculation before, right? So now it looks like, there's all these people that are working. However, we don't know what type of jobs they're working. They may be working at the gas station, right? They may be underemployed. They may be working at a factory for minimum wage. So just because the unemployment rate decreased because you came into office does not naturally mean that it was because of good jobs, right? You can be underemployed. So one thing, I don't know if you guys know, in New Jersey, as well as several states as well. In New Jersey, you cannot pump your own gas. Yeah, what'd you say? Yeah, you can't pump your own gas. You have to wait until an attendant comes, and then they pump it for you.
That's why, because the other day I put gas in New Jersey. I was like, yo, like, I'm used to doing it myself.
Yeah.
I was getting out of the car, like, I was like, nah, just wait for me.
Yeah.
Dude, is that all of New Jersey?
All of New Jersey.
I remember when I went to Wildwood. Was this just recently? Because I went to
No.
Wildwood a couple of years back. We pumped our own. They didn't say anything.
They didn't say anything because they didn't want to work.
Yeah.
But yeah, it's law that you cannot pump your own. Can't pump your own gas.
Then you gotta tip the attendant. Then you gotta pay him.
So,
I mean, you're not.
there's a way you can change that unemployment rate to go up. And I feel as if they take anyone who's on welfare right now and drug test them randomly without giving them a forewarning, and they get kicked off of welfare because they failed a drug test, then they'd have to get a job.
Yeah.
And, I'm sorry, but I take a drug test when I go for employment. Why shouldn't they have to take what they're getting free money?
It's true. That's a good analysis. You're absolutely right. All right.
And also when you mentioned about the job, like how they lowered it, you also got people that are like, well, I don't want this job. Like,
Yeah.
Like, oh,
Well, here's the thing. On the unemployment application, they ask you if somebody tried to hire you. And if you said that they tried to hire you and you denied that, then they're going to deny your unemployment, right? So, what started happening in New Jersey, because so many people were on the system, they started, like, say if you said you were an accounting major, they started pushing jobs to you, and you had to apply, right? And they would know if that if that organization tried to hire you, and if they found out that they tried to hire you and you denied it, then they're going to deny your claim.
Which leads me to my next question.
Yes.
I think that's what PhDs like doing.
Yeah.
So I haven't really I've had my old resume lived up on Indeed and everything, and I haven't really pushed for any other job right now.
Yes.
So I've been getting a lot of calls lately, job offers out of nowhere. Like it just all of a sudden started happening.
Yeah.
Now does this school like put out our information involved that we don't know about?
No, not that you don't know about. They usually what happens is they'll email me or they'll email career services, and they'll say, hey, we're looking for a student, and then we'll just send it to students. But yeah, we're not putting out things that
Like Aerotech just called me yesterday, and I feel like, well, we saw that you were looking for
Oh yes, Aerotech is a staffing agency. So if they see your resume, more than likely they're going to call you, because remember, they're getting commission off of you working. So say for instance, they tell you, oh yeah, we have a job for $14 an hour. It's not really 14. It's probably something like, no, it's really,
like something like $18 an hour.
yeah, or maybe it could be like 20 or 21, right?
They're just taking their cut and giving you 14.
Exactly. So sometimes that's where there's some negotiation with it, right? You'd be like,
that's what I learned from actually like staffing companies stuff out here. That I learned it in I think it was electronic business class.
Yeah.
She told us like every time you're if you're working by a staffing company, as soon as the company wants to take you, buy you out and actually have you through the company, is because they're tired of actually overpaying you.
Yeah.
When they could just pay you 17, whatever they pay in the company to everybody in the company 17.
Yeah. Well, here's the thing though. So you're right. Where if they're giving the company the staffing company $22 an hour, and they're really giving you 14, they'll say, we can just give this guy 16 and he'll be happy, and we can get this middle person out of that. But now they have to pay, I guess their cancellation fee. Yeah. Now they got to give a couple of grand to that staffing company. So now they have to actualize, all right, is it worth it? Is it worth it to pay? And I've seen it as high as 10 grand, right? So now I got to pay 10 grand to the staffing company. So when you think about these staffing companies, they're really making a killing, right? Because every day that you go to work, they're just counting their money, right? So you think about it. If you find, I don't know, say at a small rate, 20 people a job, and the difference between what they make and what you're making is like $6, right? So say if they're making $6 times 20, that's 120 times 20 days out of a week. 20 days a month. $2,040, right? And that's just by $20, right? So you can imagine if you have 100, if you have 200, all these companies have hundreds of thousands of people working, right? And again, you're not managing those employees. The managers at the other company are managing.
The other one that are actually managing.
Yeah. So you think about it. In 2019, the people who are winning are the people who can figure out a platform. All you need is a platform, and then make connections, right? So Amazon, what is Amazon?
Actually, they just offered me a job too.
Yeah, right.
I work right across the street from them, but they just offered me a job.
There we go, right? Because they're constantly looking. So you have Amazon. What is Amazon?
A lot of people left their company because they don't treat their employees right.
Exactly.
You said
So when you don't treat your employees right, they're going to find somewhere else. And we were talking before about all these benefits that these companies are giving, right? So for me, as a single individual, I may not be too impressed with your medical plan. I may not be too impressed with your dental plan, right? I don't really care for that, right? But if I was 65, maybe I'd care for that, right? If I had a family and I had children on the plan or a spouse on the plan, then maybe I would care about it. So now you could understand that you're going to jump from job to job depending upon where you are in life. Right.
I don't get like when I was in the military, when they were going over with us about how to fill out a resume and everything properly and stuff, like we had a whole class going to take this, and they were talking about jobs and like the salaries and the benefits, what it actually was up to versus salaries without benefits and everything.
Yeah.
How much you make. But at the same time, we're all veterans. We don't worry about insurance. We're covered.
Yeah.
We're not worried about life insurance. We're not worried about any of this stuff because we're covered completely.
Yeah.
Now, so like when I go to a job, I'm not worried about your insurance plan.
Yeah.
Because I can just pay my TRICARE. If I get a spouse, I can throw my TRICARE for a hell of a lot less than I'll be paying a company.
Yeah.
I'll be paying $55 a month versus $300.
Yeah.
So when I go to a company, I'm looking for the reputation of their employees, how they treat their employees, how the company's ran their structure or not. And then pay, of course. Like pay is my key factor.
Yeah.
So when you give me the right amount, I'll do whatever you need me to do. But like,
Yeah.
A lot of the people at Chewy, they said that they had left Amazon because at the 2-year mark, that's when they're supposed to give out 2 shares
Yeah.
to each employee that's been there for 2 years.
Yeah.
And everyone gets fired right before that 2-year mark.
Mm.
They'll sit there and try to find a reason. About 50% of Chewy that I've talked to so far has all worked for Amazon before, and they've all gotten released right before that 2-year mark.
Wow.
Or they left because of how they treated them.
So what they're doing now, they gave them like $1 raise. Like,
Yeah.
So they like instead of 14, now you're getting 15, but they took your shares away.
Oh, okay.
So the employees that already had shares in there, they were like telling them like, oh, you got to a certain amount of time to sell your shares.
Wow. Sell my shares.
Like, you still take it, because they used to give them like stock, like
Yeah.
Yeah, well, I mean,
like
2
stocks and
shares,
stuff.
shares, is a month's worth of rent and food and carpet.
Well, I guess now.
One share is like 1,000 something.
It's like 1,800, I think.
Yeah,
Well, now.
1,830.
No, that makes sense because as a business person, as you being the CEO, CFO, you're gonna say, all right, would I rather give shares or would I rather give $1 as far as expenses? We're doing well right now, so why would I give them something better than $1? Let's just give them the $1 and they'll be happy because they're making more than what they're making somewhere else.
All right,
Right?
those shares,
They got mad
at
after
least
that.
they sell those shares and they never got a month.
No, but when you're speaking about a demographic that's applying to Amazon, that demographic may be like, hey, I'm just trying to get my bills paid. So they may be more concerned about that $1 rather than some shares that they may know nothing about, right? Because it's not standard education to really understand stocks.
It's like my girlfriend's mom. She called the other day. I was talking to her about she had $2,400 in a business that wasn't in business anymore. I
Wow.
guess the company invested, like, when she worked for the company, she had shares of the company they'd given her.
Yeah.
And she didn't know that. She just got a letter in the mail about it. Well, the company's not in business anymore, so she was trying to figure out how she collects her shares and the money that she was that they tore up.
Well, here's the thing. If you have shares and the business closes, usually it's called worthless stocks.
Yeah.
And
I ended up this morning
yeah,
because I invested in the company. I was playing around, usually day trading.
yeah,
You know, watching it spike up, spike down, spike up, and everything. And I invested one more time, about 80 shares in it and everything.
yeah.
And next, you know, I wake up this morning, I lost 10 cents per share. It lost me $8.
Yeah.
Not a big loss, whatever. But to me, that's a big loss because I'm playing around $15, trying to make $15 grow.
Yeah.
And so I lost $8 because the company, I read reports that were going bankrupt, so they were going to end up zeroing out the shares and everything. It was my own fault for leaving it run overnight.
Yeah.
But when I went to sleep, it was 20-some cents a share still. So I was still good. I was only like down 30 cents or whatever.
Yeah.
Woke up this morning down $8, and I could sell my shares, but I could no longer purchase anymore because the company just closed.
Yeah.
So I'm really pissed off right now.
Wow.
I should just, because I mean, their reports came out, their quarterly reports came out, and they were still sitting right around between -9 cents to 0.
Yeah.
So I think stocks, that's usually where they're running at, so I wasn't too worried. It's the ones that go down like below 12 cents, -12 cents and everything for their annual reports or their quarterly reports. I don't mess with them. Well, it's just like, I didn't know they were going to close today. Like today was the final day. They never said that in any of the report. The whole stock name changed and everything.
Yeah. Right. So there's multiple changes that may be political changes or also be changes just to save more money. Right. And, you know, that's what I'm saying. Like everything about your job is cyclical. You really have to understand what are you really looking for. Right. There's been certain times in my career where I'm just looking to make money so I can fund something else. Right. And that's perfectly fine. I know some people that that's what I was saying about DoorDash and Grubhub and stuff like that, where when I was ordering food and professionals with like professional tire were giving me the food, right? So that means that there's people out there who are looking for other ways to make money in order to fund something else, right? So at Grubhub, you're not looking for benefits. You're not looking for whatever. You're just like, hey, I just want to make money so I can fund something else.
I signed up to be an Uber driver.
Yeah.
So far, in this last week, I've seen one run offered, and I wasn't even in the area. I was on my way back home. I know that way.
Okay.
And it was a $2 offer. I think it said $2, and I clicked on it because I wasn't in the zone yet.
Yeah.
So I wouldn't even let me click on it to like bring up to go get them.
Wow.
And stuff, but like that out of Harrisburg, I only seen one person pop up needing a ride.
Wow.
And I'm like,
You know, depends the time you go in though.
Well, I turn it on the weekend nights. I'll turn it on, you know, while I'm leaving school and everything for the day.
Yeah.
On my way home, see if there's anyone in Harrisburg needs a ride.
I mean, was this weekend?
It was just past week that I did it.
Yeah, it was pretty slow.
Yeah.
Because I tried doing deliveries. I never got one. I guess like people were like, nah, today I'm just going to the stores and go eat with my family.
Oh, well, you know what? I guess it also depends on the weather outside. I know it
was pretty hot. It was pretty good. Like,
it was nice outside. Maybe people are like, I don't want to stay in and buy the food. Let's go to the restaurant. Let's go to wherever, right?
I guess that's because like 2 weeks ago, I went in and I made 180 something.
Yeah.
Just trying to make some extra cash.
Just one day.
Yeah.
It was pretty good.
So at the end, it all depends what you're trying to do with the resources, right? So we also have payroll deductions. It says unemployment taxes. State unemployment compensations law differ from the federal law in various states. So, every single state is going to be something different. Right. So I remember at a time in New Jersey, during the market crash in 2008, man, there was people who are on unemployment for like 3 years. 3 years, right? And they were getting paid like $2,400 a month. So you have these individuals that are unemployed and getting $2,400 a month. And for many of them, they had no incentive to go find any work. Right? So you need to understand your unemployment laws. So it says here payroll deductions, of course. When you're a self-employed individual, you'll have two types of payroll deductions. You'll have the employee side and you'll have the employer side. So if it's your own business, that means that you're paying double. You're paying what you would normally pay for yourself, and you're paying the other side, which is the business side, the owner side.
But whenever it comes out of the employee's check, it comes back into the account to pay for it, right?
Say that again?
So, like, when you pay the, if I'm understanding correctly, when you pay the employee's part of it,
Yeah.
basically when it comes out of the check, it comes right back into that account for you.
Yeah.
to cover
So
that.
yeah. So you can pay on their behalf.
Yeah.
Yeah.
So
Absolutely.
you're only paying for one then, right?
Yeah. So, but you're liable to pay two. But yes, you're only paying the employer side, and they're paying for their side, but you're paying on their behalf, right?
Now, is it the same where, like, when we have our taxes taken out, the amount that's taken out of our taxes, it goes to the state and all that stuff?
Well, it should go to the employer. The employer should have the money, and then the employer is supposed to send that money off
And
for
then
you.
they request, is it a certain percentage, or does the state require by how many employees you have, how many work that time?
Oh no, they're gonna give that money, so they're gonna take the money out of your check based on whatever percentage, and then every quarter they have to submit that amount to the state and the federal government. Right, so you're paying taxes, and also the business is paying taxes on your behalf and their behalf. Okay, so it says assume a weekly payroll of $10,000, entirely subject to FICA and Medicare, federal and state unemployment taxes, with income tax withholding of $1,320 and union dues of $88 deducted. Right, so the company records and salaries and wages. So after your weekly payroll of $10,000 as a business owner, you're withholding $1,320 and the $765 and the $88, and then you just disperse that $7,827, right? So you should have that $10,000 in your bank account, and then distribute it amongst the individuals. Right. And they may have an account called salary tax expense. And based upon that, that may be broken down into FICA, FUTA, and SUTA. Right, so it's just breaking down even more.
Why do we pay 25% in taxes pretty much as employees?
As employees, well, because what they're going to say is, how are we paying for our federal funds in a natural disaster? How are we paying for the armies or the military? How are we paying for potential school bills and federal aid? And then when you talk about the state, how are we paying for maybe the roads and stuff like that? Of course, with the property taxes as well. So you have all this money that is funneled into these funds, and hopefully we have people in position that are allocating the funds the proper way, so we can all live, right? So we can have a good road, so we can have a good system. I think what we need to look at is when an organization, when a government system usually has something working for them, they're usually going to keep it. So for instance, the tolls, right? Let me see if I can research that a little bit so you can know the reason for the tolls. Reason. So it says most toll roads are built with local, state, and national government money raised from taxes. Tolls are like a tax that applies only to the users of the toll road. Toll roads allow new roads to be built and maintained without raising taxes on the general public. A toll road doesn't always stay a toll road forever, though.
All right. Name one toll road that's still not a toll road.
Right. What is that?
Name one toll road that's still not a toll road.
Yeah. Well, what usually happens with these toll roads is that in order to make one side quicker, I've noticed in New Jersey, so say if it's like a long toll road going to and from, right? They'll take out one side, and then they'll just double the price on the other side. So now we only have a toll road on one, right? And then the other side is just free flowing, so it can go fast.
Now, what about the bridge? New Jersey has a bridge you have to pay to go across.
Yeah, in New Jersey, so that George Washington Bridge.
Yeah, so why do you have to pay to cross a bridge?
What
was the point of building a bridge?
Well, here's the thing: there isn't enough people complaining. That's generally how it is. So the reason why I put up this excerpt about a toll road as well. Hold on.
I mean, I don't know if you noticed, but on the Hudson River Bridge, there's like this like blind toll, like this easy pass thing.
Yeah.
You pass by if you don't have an easy pass, you get that ticket home.
Yeah.
Yeah, you get like a
It's like $6. So it's like you technically already in New York and you pass by there and you still paying another toll.
Yeah.
On top of the one you just paid $15.
Yep.
You go through the easy pass thing without an easy pass.
Yeah.
You're paying that full amount once you get that ticket stub show where you got off at.
Yeah.
I found out the hard way.
Yeah, I mean they'll take a picture. They'll do what they have to do.
You get a nice bill in the mail.
Right. So the reason why I brought this out too about tolls is that at one point there were no tolls, right? So what happened is that I believe we were trying to fund one of our wars, and they're trying to figure out ways to fund the wars. So they're like, all right, people are going to have to start paying in order to go to certain spots. So they began that, right? And then they seen how much money they were making.
They kept it going.
Right? They kept it going, right? They're like, wait a minute. This is a good source of revenue, and no one's complaining about it. So, because no one was complaining, why? Because it was like 5 cents, you know what I'm saying?
Yeah,
and then it rose up to 10 cents.
Now you're like paying like.
And then it rose up to 25, and then it rose up to 35, and now it's $1.
And now they're gonna put another toll down in New York to go to downtown New York.
Mm-hmm.
It's like $20.
Wow.
So like Uber drivers are trying to complain.
Yeah.
Like, how you gonna put a toll? If we're already in New York, like you want us to pay tolls inside New York too?
Yeah.
They should do that.
Yeah.
That's why they started like building like new like fixing the roads and stuff. Because people don't want to pay like that New Jersey toll.
Yeah.
So they taking they go by Morristown, like
Mhm.
they take 80, Interstate 80, down to New York.
Yes.
And I think they're about to build a toll right there. Like it's not long. It's not that long until like they actually build a toll around there.
Yeah.
So people have to pay that toll too.
So we also have compensated absences. So paid absences for vacation, illness, and holidays accrue a liability if all of the following conditions exist. Of course, when we talk about any organization, they don't want to give you vacation days, right? They don't want to give you illness days because they feel like they're paying you for essentially doing nothing, right? So it is a benefit. And that's why a lot of places they'll just work off of they'll work off of the per hour type basis where it's just an hourly type of thing. And that'll be it. I recently had a friend who just started a live-in position, like as a health aide, just being inside of the house while someone who has a disability is there. So the ad said, okay, we're going to pay you $150 per day, per 24-hour a day, right? 3 days a week, right? So she was like, man, I really feel like I'm working too much. And I'm like, you're working too much because you didn't do the calculation. Here's my calculation. Because 24 hours times 3 is 36 hours, right? So that's her full work week, right? So I did 150 divided by 24. She's making $6.25 an hour. So she didn't really calculate that. So they purposely put that ad as, yeah, you're going to make $150 per day, right? Not really making you realize that it's really $6.25 because you're there 24 hours and you can't leave the house because the person can wake up in the middle of the night or whatever it is. Of course, you can sleep. So there's certain hours where, let's even say 8 hours let's say 7 hours is for sleeping, right? The person may be sleeping. even though you still have to be at least like a little bit alert, right?
Just in case that person just wakes up.
Yeah. 24 minus 7. So let's say you're working 17 hours, right? So let's do 150. Yep. It's still only $8.82. So it's not much anyway. Right. So, you know, you got to look at these calculations because a lot of these jobs don't want to pay you for vacation, illness, and holidays and all this other stuff. So you always have to read all of the fine print. Right. I mean, think about it. You think about an average job. How many days vacation are you really getting? Like maybe 2 weeks? 2 weeks is really what? 10 days? Right? I mean, really, what can you do with that?
Don't count.
Right? So most positions, they'll say PTO, paid time off, is the same as your illness. So your sick days are the same as your vacation days.
We got UTO and PTO.
Oh, what's UTO?
Unpaid time off.
Oh, yeah.
Oh, yeah, we get that too.
When you get hired on, you get 40 hours right off the bat of UTO. That's your sick days, pretty much.
Okay.
And then you have paid time off, which you start accumulating when you start.
Oh,
You don't get it after 60 days.
Yeah.
So my 60-day work had like 15.5 hours. It's 1.54 hours every week.
Mm-hmm.
And then you have 5 doctor's notes you can use at the most. And if, say, like a doctor says, oh, you got to be out like 4 days because of flu or whatever,
Yeah.
that's 4 of your notes used up.
Wow.
Not just 1 note.
Wow.
Even though it's only 1 note that says you have to be out.
Wait, so then they're essentially saying you only have 5 days then.
Yeah, pretty much.
So you're telling
I have
me,
1 doctor's note left. That's the only reason I'm saying all this.
right, so you're telling me as an individual, our bodies are so complex, right? That in 365 days, you're saying my body has only the opportunity to feel bad for 5 days. That's what you're telling me.
Well, the way they're looking at it is, well, you get UTO and you get PTO.
Yes.
See, a lot of people are stupid. They waste their UTO like me.
Yeah.
On days where they just don't feel like being there. So I'm like halfway to my shift, I'm like, I got school in the morning. You know, I want to get off a little early.
Yes.
You know, so I use my UTO for the last 3 hours or whatever, so I can get off and get some sleep.
Yeah.
But then they finally told me after my UTO was used up, like, oh, you did know that we have school accommodations, right? So you can set your schedule.
Wow.
I'm like, wow. So I wasted my 40 hours of UTO already.
Yeah.
You know, part of some of my PTO here and there just to get off early.
Yeah.
And see, so that's where I found the trick around their system. PTO, we have to give 24 hours notice before use.
Yeah.
But if you're out of UTO, they take from your PTO. So you're still getting paid for your time off. And they can't say nothing about it because in their rules, they're pulling from your PTO. It's basically to keep you from losing your job. It's their little thing.
Yeah.
So now I just let my UTO run out and I'll just burn my PTO so I get paid for the time off instead of not getting paid.
Mm.
But then again, I'm taking the chance that if something comes up or whatever, like we can clock in at 4:46 p.m.
Mm-hmm.
We won't get paid till 5 p.m. though.
Yeah.
But if I clock in 5:01, I don't get paid till 5:15, and I'm considered late, and they take 15 minutes from my UTO.
Wow.
Even if I clocked in at 5:01 instead of 5 o'clock, they take a full 15 minutes from my UTO.
But when you clock in early, do you have to start working?
No.
Oh, okay.
You can or no.
Yeah.
But they have a meeting at the beginning
Okay.
and stuff.
So
So
it's good to just clock in.
you're basically just clocking in and standing there waiting for the meeting to start at 5 o'clock. Because once the 5 o'clock bell hits,
Yeah.
they do a little 5-10 minute meeting, go over everything, where we're at for the night, you know.
Okay.
Which, speaking of, I saw my company on the news this morning.
Mhm.
They were talking about profitability and all that stuff.
Yeah.
And it's about Chewy has a 12% or hiring, like 12% increase in hiring right now.
Yeah.
Which they said doesn't make sense because they have been negative in the profits for the last so many years.
Yeah.
But their top line gross is positive. So
Yeah.
that's like where they're it was
So they have too many expenses then.
yeah, I think we lost what was it, like 218 million or something this last year.
Wow.
And so yeah, that was nothing to them.
Wow.
They pay out over $25,000 a day in stock and just wages for one shift.
Wow.
That's not including first shift and everything. That's just one shift, 180 people, and that's
Wow.
only the people that are in outbound. We're not even counting the people in inbound.
Yeah.
So 180 people in outbound, and that's $25,000. You know, because we only get the same flat rate.
Yeah.
And everything, give or take a couple people. So you figure that all out, not including supervisors' pay. So $25,000 a day just for one shift of 180 people for their salaries.
Wow.
So you know the company's making money for doing that.
Yeah. They are, man. Wow.
And they're about, I guess, it's all out in the news now, like the IPO. So.
Mm-hmm. All right. So it's saying compensated absences here. I've never seen anything say compensated absences on any type of current liabilities, but there is that option there.
There you go.
So wouldn't that be just like a prepaid expense then?
What'd you say?
Compensated absence, wouldn't that be a prepaid expense?
No. Because they're only going to put that on when you use it. So they'll.
If you don't, but there's some companies that that there's like a certain time, like if you don't use it, they pay it to you.
Yeah. So then
FedEx does that every year, like so you get to you make your PTO hours, you know,
Mm-hmm.
It's like you be accumulated every like by hour, you accumulate PTO hours, and to a certain point, like a certain date, they pay it off, and then next year you start from zero again. Like right now, they already pay us last week, so that means from this weekend on, we're starting back from zero.
Yeah, everyone has their different policies, right? Even with bonus agreements, it says payments to certain or all employees in addition to the regular salaries. Bonuses paid are an operating expense. Unpaid bonuses should be reported as a current liabilities because we're liable to pay that bonus in the future at some time, right? So we're just liable.
Question for you.
Yes?
When it says you can't sell any shares of the stock, 80 are held for pending order, you can cancel your pending orders to sell more shares. What does that mean?
Oh, wait, say that again?
You can't sell any shares of the stock that I'm in. I tried to sell this morning because they were worn out.
Yeah.
So 80 are held for pending orders. You can cancel your pending orders to sell more shares.
Oh, okay, so you have to cancel first. So cancel. So what are they saying? They don't have enough?
Well, what's funny is the stock price went up.
Yeah.
But I was trying to sell out the other company, but the stock name changed today from FTD to FTD Cost Incorporated Common Stock.
Yeah.
And then, so I wanted to sell because it went down to 10 cents a share.
Yeah.
And it said orders placed, but it's saying that whenever I click on the sell button, it says no sellable shares. You can't sell any shares of this stock. 80 are held for pending orders. So does that mean that there's other orders placed to sell theirs?
Yeah.
I mean,
Like,
nah, hold up.
Yeah.
Because the company went bankrupt.
Yeah.
Yeah, I don't think you could get that money though. After
Yeah.
you go
But
bankrupt.
why is it still showing the money saying?
He's a common like when you buy shares, you're like he's
Yeah.
like a common share, right?
Yeah.
It's not
So
a
you're not
stock.
even preferred stock. You're just a
Yeah.
common share.
Yeah.
So
If he
potential.
lost money, he's lost already.
But it's still showing that it's in the company.
Oh, maybe I don't know. Maybe something's wrong with their system, or maybe it'll update later.
I like that they never like buy another stock while it's so low.
Only preferred
All right.
stocks are the only people that get to get paid if the company goes bankrupt.
Yeah.
Other than that,
Okay. So it says here, payments to certain or all employees in addition to their regular salaries or wages. And again, just we all understand about bonuses, and we all understand about the golden parachutes that we talked about before, and that as a CEO or CFO, remember, maybe that's something that you should work out. So it says a large payment of other financial compensation guaranteed to a company executive should the executive be dismissed as a result of a merger or takeover. So this is why many executives aren't worried about them getting fired, because they're still going to get like one large lump sum anyway, right? You have many of these individuals who, I don't know if you know that, but even about sports teams, right? So when these executives get fired, they still have the contract, right? Where maybe even players, when they get let go, for years to come, many times they're still paying that person. When Allen Houston for the New York Knicks, that was like one of the first ones that I remember. Allen Houston for the New York Knicks, he wasn't playing anymore, but he was still getting his money from the $100 million contract, right? So it's always good to have your bonuses and have a certain contract available, and all of these things become current liabilities to the organization in order to try to keep the employee.
I think if you retire or something, I don't think like if you retire, I think if you retire before the contract ends, like the years remaining, the money that is remaining, I don't think they pay it to you.
Oh yeah, well that's when you have to just go sit on the bench,
Yeah.
right? Go sit on the bench and do business as normal.